Hello, ladies and gentlemen. Welcome to Triple N Media. I am NIK NIKAM. In this presentation, we are going to look at Nasdaq stock market. Is the Nasdaq crashing and is the worst yet to come? So let us begin. QQQ ETF is a proxy for Nasdaq index. So we're going to be following QQQ to understand what is happening with the Nasdaq or the tech stocks. As you can see, back in March of 2020, following the coronavirus pandemic, the stock market dropped from almost $240 all the way down to $170. At the beginning of April, it just took off like a rocket until it reached $300 by the beginning of September. And then for almost 2 months, September to November, it went on a zigzag. This is the ABC correction. After that, it had another wonderful run from November till the end of January. Then after that, it has taken another nosedive. The question is a correction over? Or how far is this going to drop? How long is this correction going to last? We had to understand why the Nasdaq stock market, especially QQQ, dropped much more than the Dow Jones Industrial. The interest rates had a significant impact on the Nasdaq stocks as the interest rates, the treasury interest rates went up by 40 basis points. That triggered the Nasdaq drop all the way from $338 to $314. That's just a little over, I would say, 12 to 13% compared to the low seen in March of 2020. These are the Bollinger Bands, which are like 10% on either side. As you can see, it has already broken through the 10% downside curves. And so is a slow stochastic, which is also reaching the bottom, saying it may be oversold. But the real question is, how long is this pain and agony and uncertainty going to last? That's what we will focus on. I already mentioned about the interest rates, but there are a lot of economic data that are going to be coming in the coming weeks and months, which are not going to be business favorable, which are not going to be corporate favorable, which are not going to be helping the bottom line of the corporations. And I'll tell you why. The labor costs are going up, regulations are going up, and more industries are being shut down. And all of these things will add to the extra cost of doing business. As a result, companies may move their jobs outside or streamline the employment, which will lead to more unemployment and all these things. But the most important thing is the Nasdaq has made a significant correction here, almost 12-13% compared to the bottom seen on March 2020. If you look at the correction that happened in November and December, this lasted for 2 months. This correction lasted for 2 months. And if you just trace this one, this is just the first limb of the correction. Then you have the first wave here, then we have ABC, then you have ABC, then you have ABC. So all we have seen is A. There could be more zigzag here, and then it may come down to as much as 20% from the March 2020 bottom. That's just a speculation. I am not an expert in stock market. I just analyze this so I don't lose money. So I'm just explaining things the way I see it. Similarly, the exponential moving averages are also making a turn downwards. So given all these factors, I think the market is going to be uncertain for next 4 or 6 weeks based upon what we have seen here. If this is going to be replicated, we don't know how far down it's going to go, but here back in November, it went from like $310 to maybe $260 in the first wave and $270 in the second wave. If that were to reach this level of $270, then you're talking about a 38.2% correction from the March 2020 low. We don't know, but as I said, it is important to follow some of the parameters that are driving the Nasdaq stock market. Of course, now we have the earnings which are going to be coming up in April, and all these stocks which have taken a beating in January and February may start making some moves, like as we can see here, which may increase the stock index, especially the Nasdaq, for a month or so. But once the earnings start coming down, then we may be hit with another decline. I mean, that's my speculation, because usually the stocks start going up like 2 to 3 weeks before the earnings are announced, and then it has a big run up. That may be what we saw here. Then it has a big run up and then it comes down. But the main thing I want to emphasize is that Nasdaq is under pressure. It has already started a corrective wave. This is not just like this one, which is kind of a minor one. So this is a significant correction. So this may be just the beginning of a protracted correction, just as we saw in November and December. So it is best to be prepared so that we are hedging our stocks against such volatile changes in the market until it stabilizes. And then once you have a major change like this, usually I think you begin to see an uptrend, and that may continue slowly with minor gyrations in the waveforms. So that is my analysis for my own personal purpose. I am just sharing with you because technical indicators are extremely important. The big money and the hedge fund managers and all the experts follow technical analysis very, very religiously. They also have money to make things move, whereas we are just trying to ride the market and see if we are lucky. Maybe we make a few dollars. If not, if we were to buy here, you would have been waiting for 2 months for it to, or 3 months to get back to what you paid. So those are some of the things which we have to keep into account. It's kind of interesting. Somebody put a picture of a lady and they said, "This is what I ordered." Then they got a picture of a male. So if you're ordering your stocks to go up, you need to be aware of the fact that what you're going to get may be a downslope in the stock, which is totally opposite from what you ordered. So a good rule of thumb is if you're playing Nasdaq, which is extremely volatile, and prices can change 2, 3, 4% in a day, what I do is I do it with caution. Option calls, as you can see, this is QQQ. I just put together the open interest in calls and open interest in puts. As you can see, the open interest in calls is considerably lower compared to the open interest in puts in the March 5th week. Okay, this is March 12th. And as you can see, they have a bigger number. So some of the economic indicators show that the stock market is going to be unstable in the coming weeks because of the interest rates, unemployment, manufacturing, and increased cost of goods, and also world economic changes. We just bombed Syria. And things like this can rattle the stock market. This is just a quick overview of what I think about Nasdaq. It is the best index for tech industry related stocks. And this is what it looks like. We'll see in 4 weeks as whether our expectations are right or wrong. Nobody is going to be right all the time. So what do you think? What are your expectations looking at this graph back from 2020 March to almost 2021 March? Please leave your comments and I will see you next time. I did a wonderful video on AMC, gamma squeeze, beware. Please watch that one. That will give you a lot of insight into how options can change the stock prices tremendously. See you next time.